We got all our staff here. That's all we need. We got the dream team. All right, it is 2:31, and I will call to order the Audit and Finance meeting for March 25th, 2022. Present is John Perkins and I. Sheila Saxton is taking minutes, and we've got Adam Norris and Brian Kidney from the City Manager's Office. I don't know who we have online. Can you tell us, Brian?
Yes, we have a couple of our staff members on. Nancy Cooper, Lindsay Gallman, Steve Wagner, of course, is on. Melissa Hunter, and our CFO, Cindy Gray, is on. And then also we have a couple gentlemen from our investment advisors who are going to be giving us a presentation a little bit, and I'll introduce them when that item comes up.
Wonderful. Is Ron Luce here, or is he not here today?
No, Mr. Luce will not be presenting this week. He's out this week. Cindy is going to give that presentation.
Oh, okay. Well, we've got out-of-town folks, right?
Yes.
So, and they are here to give the quarterly investment update?
Correct.
Anybody have any objection to doing that first and taking that out of order?
No objection, Mr. Chairman.
Thank you, Mr. Perkins. If they're ready, Mr. Kidney, let's cue that up and get going on it.
Sure. We have Nick Kinney and Bob Cheddar, both from PFM Asset Advisors. And if I messed up the name of the firm now, I forgive me. The city's been working with PFM Investment Advisors for multiple, probably 4+ years. I know it predates me by about 9 months to a year. And they are handling and have handled the overall investments of what we would term our idle funds. And I receive a quarterly update from them. They then give me a monthly update, and that's what I've been getting to the council, is this monthly update, and then kind of butchering the description of what's going on. And so I thought it'd be best, since we already have a quarterly meeting with these folks, to go ahead and have them give you the quarterly meetings. I think you'll find a lot of value on this. So with that, I'll turn over to Nick, and if you want to take it from here and share your screen with whatever you might present.
Yeah, thank you, Brian. Good afternoon, City of Independence. My name is Nick Kinney. I've got on the call here with me today Bob Cheddar. We are PFM Asset Management. We do have some things to go over with you today. Like Brian said, we do give a quarterly report. We've previously kind of just given that to Brian and staff in the past. We're happy to do that going forward with whoever wants to be on the call. So I'm going to go ahead and share my screen here real quick. Bob, do you want to introduce yourself while I'm pulling this up?
Sure. Thank you, Nick, and good afternoon, everybody. My name is Bob Cheddar. I've been responsible for managing the city's portfolio for some time now, since the inception of the portfolio, and have, of course, been involved in communicating to the city our strategy, performance, and outlook for the market. Okay.
If people can give me a thumbs up or a yes that you can see my screen when it shows up, we should be...
It looks good, Nick. Thank you.
Okay. So if you notice here, this is portfolio performance review for the quarter ended December 31st. So we'll touch on kind of what happened last year. But as you know, things have changed quite a bit in the world in general and in the investment world since December 31st. So Bob will shed some light on some of the things that that are pressing and updated for the portfolio as of today. So with that, we'll go ahead and get started. And we'll, if you want, save questions for the end, kind of jot them down, and we've left some time for question and answer. Okay, I think we're ready.
Okay, thank you, Nick. So I think we'll start on page 5. There's quite a few slides in the presentation. We're not going to hit on all of those, but if I skip over one that you have interest in, we could certainly go back and talk about that. But we'll stick to some big picture themes about the economy, interest rates, and then talk specifically about the portfolio. So we'll start with the economy. And this page just shows the broadest measure of economic activity, GDP, and how growth has rebounded from 2020, which of course was significantly impacted by the pandemic. Growth has rebounded in 2021 and is expected to be solid through 2022 and beyond. As Nick said, most of this data, all this data is from December 31st or before. So I think recently there's been some expectation that growth might slow compared to these expectations, but for the most part, economists continue to believe that the economy will continue to do very well. Moving on to the next page, which is page 6, entitled Consumer Prices Rise to 4-Decade High. Inflation has been on the minds of economists and consumers for the better part of a year, and recently has been a driver of interest rates, which is important for the city's portfolio and very important for expectations of Federal Reserve policy, which we'll touch on in a few minutes. This chart shows the Consumer Price Index, and at the end of December, increase in consumer prices was at 6.8%. And this chart, I think, does a good job of showing the components of inflation and where we've seen some of those price increases. So you'll note that the energy sector, which is green, has increased significantly over the course of the past 12 months, and I'm sure you've noticed that at the gas station, and most of the other categories have increased as well. Through most of 2021, the economy was struggling with supply chain issues as economies around the world started to open, and that was, I think, a contributor to inflation last year. So some of the increase in inflation was just simply due to the comparison. So in 2020, particularly in March and April of 2020, inflation was very, very low. So when you compare prices increases to that period, it was a bit elevated. But I think recently, over the past couple of months, there's been a heightened concern that inflation might be a bit more persistent than many economists had thought it would be. There was this expectation that as we started to move through 2022, inflation would start to subside and we'd start to see a decline in inflation. But in fact, over the course of the past couple of months, inflation has continued to move higher. The last consumer price report was almost 8% at 7.9%. And some measures of inflation, particularly at the producer level, have been as high as 10%. So that's a change, I think, in expectations. Most had thought by this time we'd start to see a gradual decline in inflation over the course of 2022, but that trend hasn't materialized yet. Recently, the war in Ukraine has caused additional inflation concerns. I'm sure you've seen headlines about the energy sector and the dependence on Russian energy in some parts of Europe and in the world. That part of the world produces a significant amount of the world's grain supply. So there's concerns that supply chain disruptions might continue as a result of the war in Ukraine. So why is that important to us? And if we move forward to page 9, which is titled FOMC Accelerates Asset Purchase Tapering, this is a snapshot of where the Federal Reserve thinks interest rates will be over the course of the next couple of years. And this chart is from their December meeting. And if we focus at the dots right above the 2022 date, each dot represents a member of the Federal Reserve Open Market Committee, which is responsible for setting the overnight rate. So each dot represents a member of that committee and where they think rates would be at any point in time. So if we just focus on 2022, most of those dots are right around 1% or so. So in December, markets thought interest rates would move higher, but only gradually through 2022. But if we were to look at this plot now, which is sometimes referred to as the dot plot, all of those dots are above 2.5%, and some are as high as 3.5%. So the expectation is that the Federal Reserve will continue to increase rates. They increased rates at their March meeting, and at a much quicker pace than was previously thought. So that's had an impact on expectation of interest rates. So if we move forward to the next page, which is a snapshot of Treasury interest rates, and this is important for the city's portfolio because we invest in Treasury and agency securities in the portfolio. So we invest only in securities with a maximum maturity of 5 years. That's because of your investment policy limitations. If we just look at the 73 on this page, that's the yield of a 2-year Treasury at the end of last year. But because of the increase in expectations of Federal Reserve policy and growing inflation concerns, a 2-year Treasury is now yielding 2.30 today. So a significant increase in interest rates over the course of the past couple of months. So that I think is a bit of a double-edged sword. So when interest rates move higher, the value of fixed income securities declines, and you can see a chart on the right-hand side of the page which reflects that. So as interest rates move higher, the value of bonds that you hold in a portfolio declines in value, but it does give you the opportunity to invest at much higher yields as we reinvest over the course of the next year and 2 years and beyond. And we'll talk about how that will impact the portfolio in a few minutes. So just to recap, we think that the economy will continue to do well in 2022 from a growth perspective. The labor market continues to do well. Inflation is a very real concern. We haven't seen inflation of this degree in several decades. So again, we're talking about numbers of 8 or 9% depending on the measure. Those numbers will decline in time, but it's going to be, I think, at a much slower pace than some had expected just a few months ago. And all of those things have resulted in a very active Federal Reserve increasing short-term rates, and as a result, interest rates across the yield curve or across the maturity spectrum have increased. So if you were to go out and try to apply for a mortgage today, mortgage rates are almost a full % higher than just a few weeks ago, and that's because interest rates have moved higher across all maturity spectrums. So that's a brief economy and market update. I'll move on to the portfolio unless there's questions. And I think, Nick, the best page to start on would be 16, which is a summary of the portfolio. Your investment policy is restricted to very high quality fixed income securities. We hold Treasury securities and federal agency securities in the portfolio, and there's a component of your holdings that are in a short-term local government investment pool. So you can see the total amount on the top of the page is just under $146 million, $118 million in a portfolio that I'm responsible for managing, and then roughly $27 million in the MOSIP, a local government investment pool. And you can see the breakdown of the sector allocation on the right-hand side. On the bottom of the page, you'll see a maturity distribution of the portfolio. And what you'll note here is a significant amount of the portfolio is invested in relatively short-term instruments. The 18.7% is really an overnight investment. So as interest rates move higher, the yield on that investment adjusts very quickly. And then over the course of the next couple of years, there's a significant amount of the portfolio that will mature. It has a laddered structure to it. It's not a perfect ladder, but we do have maturities rolling off over the course of the next few years, which allows us to reinvest at much higher yields, given, of course, the city additional income over that period from interest earnings. So moving on to the next slide, I think we'll jump forward to page 20, which is just a snapshot of the portfolio that I'm responsible for managing on a daily basis. So it takes out the short-term local government investment pool portion of it. We have a benchmark. We've historically had a benchmark assigned to the portfolio, which is the 1 to 5 year Merrill Lynch Treasury Index, and we've used that benchmark to help guide the management of the portfolio. So all of the securities in the portfolio mature less than 5 years, with a significant amount of portfolio investing well before that. So you can see the maturity breakdown on the bottom right-hand side of the page, and you'll note that the blue bars are the portfolio. The gray bars is what we use for a comparison of the portfolio, and we have a shorter duration than the benchmark, which means we've taken on less interest rate risk than the benchmark or the market in general. We've done that for a couple reasons. One, because we thought interest rates would move higher, so that protects the market value of the portfolio for if interest rates were to move higher, which of course happened over the course of the past few weeks. And additionally, it gives us a better opportunity to reinvest at higher yields over the course of, as I said, the next few months and years as interest rates can continue to move higher. So we've adjusted our strategy a little bit over the course of the past few months, and that was simply to not buy longer duration securities in the portfolio, longer maturity securities in the portfolio, because we did think that rates would begin to move higher. So again, that protects the portfolio's value if rates were to move higher, and gives us an opportunity to reinvest at higher yields later on. Moving on to page 24, which shows the performance of the portfolio compared to the benchmark. We really, I think, show two components of performance here, and I think they each tell you something different. The interest earned column, or row I should say, is the amount of interest earnings that the portfolio has generated during each period. So that's the amount of interest that has been paid in the portfolio and accrued in the portfolio. It would include any realized gains or losses, but not unrealized gains or losses. So I'll talk about that in a moment. So over the course of the past 3 months, ending December, the portfolio earned just over $374,000 in interest, and just over $1.5 million over the course of the past year. And since the inception of the portfolio, we're roughly at about $1.66 million, which goes back to September of 2016. The bottom part of the graph shows the total return of the portfolio. So what that does, it shows the impact of market value changes of the portfolio. So these are unrealized values. So it shows the fluctuation of the holdings of the portfolio's interest rates move up and down. So during the 3 months ending December, the market value of the portfolio declined because of an increase in interest rates. So that, again, that's not a realized gain loss, I should say. It's just a fluctuation of the value of the securities in the portfolio. They still continue to earn interest, and as I said, that's reflected in on the top row. So the total return of the portfolio is both of those columns put together, both of those rows put together. So if we add the interest earnings and the change in market value, it gives you a total return, and it gives you just a different, I think, insight into how the market's impacting the portfolio. If the duration of the portfolio were to be longer, meaning if we held more longer maturity securities, the market value loss would have been a little bit less. So we show the portfolio's total return as well as the benchmark total return. So over the course of the past year, from a total return perspective, the portfolio's about 13 basis points better than the benchmark at 0.97 compared to negative 1.1%. So again, that's just two perspectives of how to look at the performance of the portfolio. And on page 26, we show the details of the interest earnings over time and how it's accumulated since inception. I did want to stress again, the types of securities that we hold in the portfolio. Your investment policy demands very high quality fixed income securities. The first objective is safety of principal. The second objective is making sure there's enough liquidity. And then the third objective is to generate return and income. So all of the securities in the portfolio are very high quality fixed income securities, either Treasury securities or federal agency securities at this time. The maturity restriction is 5 years, so that limits interest rate risk in the portfolio. And our objective over time is to perform in line or a bit better than the benchmark, and to generate consistent interest earnings over an economic cycle. So we try to position the portfolio accordingly, and of course we think about market events and how interest rates may move around and impact our the portfolio, but we're mostly concerned about the long-term performance of the portfolio and of course safety and liquidity, as I mentioned. So I think this is the last slide that we prepared to cover. So I'll pause at this point. Certainly if there's any questions about the portfolio or the market or strategy, I'd be happy to answer those.
Yes, this is Dan Hobart. I've actually got a couple of questions.
Sure.
The dot graph where members of the Treasury Board think that the interest rates will go to, or what they should be.
Yes.
Is there a calculation or a formula that's sort of accepted, like for every one interest rate point that affects the economy in a certain way?
Sure, that's a good question. So, generally, folks and economists would believe that as interest rates move higher, that would start to slow consumer demand. Potentially mortgages. I mentioned mortgage rates are higher, so that could potentially slow mortgage demand and have an impact on the housing sector. Shorter term rates have an impact on lending rates for autos and other consumer goods. There's not really an equation that says, if the Federal Reserve increases rates 1%, that will have X impact on GDP. So it's difficult to prescribe a number to GDP, for example, as to the impact on consumer spending and other forms of growth. But generally, the conventional wisdom is that as interest rates move higher, economic growth tends to slow. Right. Most economists think at this time the economy could absorb a fairly meaningful increase in short-term rates and still continue to grow for the balance of this year and into 2023. So moving from 1% to say 2.5%, which is what I think the markets are thinking about now, in that context, probably wouldn't have a significant impact on growth. There would likely have to be some other factors that would begin to slow consumer spending for it to have a meaningful impact on the economy. But there isn't one-to-one formula to describe that relationship.
Sure.
But some have tried. It's just really difficult. There's a lot of moving parts to it.
Totally understand. I obviously not working in this field. You don't know what you don't know, and this is Greek to most people, me included. So, will these interest rate increases that we know are happening and will continue to happen, will that affect our portfolio, or how will it affect our portfolio?
Sure. So I think in the short term, as we illustrated on the return slide, an increase in rates causes the market value of your holdings to decline. That's more of a short term impact. So those losses aren't realized. Those securities, for example, will mature at par. I think the immediate impact is that as we reinvest at higher yields, the interest earnings of the portfolio will increase. So that's certainly a positive. And as we move through the business cycle and interest rates move higher, we reinvest more dollars at higher yields. That has a positive impact on the interest earnings. The negative part about that is, if there's borrowing to do, you do that. You're doing that at a higher yield as well. But as far as the portfolio is concerned, over time it results in higher interest earnings for the city's portfolio.
And one last particularly stupid question: do you guys? I'm assuming you work on municipal portfolios to some degree?
Right. Almost exclusively, right.
Okay. So is this, again, stupid question, but I'm assuming our portfolio is full of investments that obviously you recommend for municipalities, and in line with that, are there other strategies that other cities use?
Sure. So the guiding principle is the Missouri statutes, which dictates the permissible investments for municipalities. So that those statutes restrict purchases to Treasuries, federal agencies, Fannie Mae, Freddie Mac, a few other high-quality fixed income securities. And those securities must have a maturity of less than 5 years. So that's what really guides the security selection in the portfolio. We're not permitted to go beyond those sectors. So all municipalities in Missouri would be restricted to those securities. Across the country, state statutes differ. So there are municipalities that use other sectors, other security types, but for your portfolio, we're restricted by the relevant state statutes.
Thank you.
The maturity distribution and the overall strategy, or the benchmark, is very consistent with what our clients use across the country. It's a somewhat low risk strategy from an interest rate perspective and a reinvestment perspective over time.
You brought up one more thing, and then I'm done with my questions. Fannie Mae and Freddie Mac, since there's a chance that mortgages and housing spending will decrease with increased interest rates, will we invest more or less during this time in those types of securities?
Sure, that's a really good question. We passed over a slide in the presentation that shows the spread or the yield difference between Treasuries and a variety of other sectors. So there it is there. So the chart on the top left-hand side of the page shows the yield difference between Treasuries and federal agencies. The federal agencies haven't been very active issuing debt the last few years for a variety of reasons. So the yield difference between Treasuries and agencies is very, very narrow. In fact, it's very close to zero. So in an environment like that, we would prefer to invest in Treasury securities. If that blue line were to go above the black solid line to 5 or 10 or maybe even 15 basis points in additional yield compared to Treasuries, we'd likely invest more in federal agencies. But at the moment, it makes, we think, more sense to utilize the Treasury sector because we're not adding additional yield by buying federal agencies in the portfolio. They're safe, they're very high quality, But we do think that, to invest in a sector outside of Treasuries, we should be compensated with some additional extra yield, and the current market isn't offering that. So I'd expect that over the course of the next few quarters, depending on where we hold federal agencies in the portfolio, the allocation might actually decline because there isn't additional yield to be offered in that sector at the moment.
Mr. Perkins?
Yeah, thank you. So on slide 5, under the forecast there of 2022, 5.2%, then in 2023, the forecast is 2.2%. Mm-hmm. Why is that forecast such a drastic decline?
Sure. So I think certainly in 2021, you're still comparing to a very, very weak year in 2020. There was still the expectation that this year there would be pent-up consumer demand. Comparisons still aren't really apples to apples yet. But then in 2023, the expectation that growth would start to moderate as some of the fiscal stimulus that was put in place began to wear off, and the thought is that would begin to have a modest negative impact on growth. A lot of the economic data that we've seen last year and into 2022 is a bit skewed because of the comparisons to 2020. So that's part of it, and some of it is just due to the fact that economists think that demand will slow a bit next year because of some of those items that I mentioned. In some cases, it's hard to find goods. It's really hard, for example, in some places to find a new car. In some places, it's difficult to find housing. It's difficult to purchase furniture because of supply chain disruption. So some of that's handicapped in there as well.
So here's more of a question about where do you guys do your research, get your information with the change in global uncertainty, which can move very quickly from day to day and certainly week to week.
Sure.
Where do you get your best information to help give you the analysis to make the best decision for our funding?
Yeah, so I'll mention a few words about our process. So we've been managing fixed income portfolios for municipalities for 30 years or so. We have a very experienced team of portfolio managers and analysts who have been working on those portfolios for that time. It's a very seasoned group. So we have a lot of experience in managing portfolios like the cities. We have a portfolio management team who is responsible on a daily basis for managing portfolios. In addition to that, we have a portfolio strategies group, which is responsible for producing data like we're seeing today in the presentation, and helps the portfolio management team to gather information. So a lot of the information comes directly from the source. So when the BLS releases data, we compile that data and analyze it. Other sources of information are from economists that might work for the large Wall Street firms or other private companies. So the data really comes from a variety of places, but I think it's really our team that assimilates that data, creates a strategy, and then a portfolio management goes out and executes that strategy. Is really the strength of what we do. So we have access to a lot of information, but the team then assimilates that data and generates strategies for our clients.
Well, thank you. That's all I have, Mr. Chairman.
Thank you, Mr. Perkins. Mr. Kidney, Mr. Norris.
No, I don't have really too much to add. I just want to thank this group. We've been working with them, like I said, for about 4 years. It seems to be very, very positive. One of the council members mentioned about different investment ideas. I think Nick, Bob, and I mean, we've talked a little bit. I think we want to talk a little bit about taxable munis, if that's still kind of in there. So there might be other investments we still have not added to our policy that are allowed under Missouri statute. So we will continue to look at those. If something comes up, then we would obviously bring it. But I think the important thing here is to see it's an active investment where a lot of municipalities will do it. Like in previous places, I've been, it'd be more of a passive. You just ladder your investments out and just leave them there. Don't worry about them. And I think you definitely see when you're looking at the difference between our portfolio and the benchmark, we're still beating the benchmark, which is basically our peers. I think we're seeing even net of their fees, it's a successful program. So we're happy with that. And I guess follow-up would be, is this something you'd want to continue on a quarterly basis? Was this too much, not enough? Or we can talk offside?
No, we can talk out loud. I'm all for this.
Okay.
Absolutely.
I would agree. Particularly a quarterly would be perfect. It's just given as weird as global uncertainty is just on everyone's mind. I think it'd be appropriate as well.
And gentlemen, Nick and Bob, thank you so much. Oddly enough, the econ and finance geeks did the best job. I always want everybody to make shorter, more succinct presentations, and you guys knocked off the bite-sized chunks that allowed us to sort of understand what you were saying, so I very much appreciate it. So we'll look forward to seeing you in a few more months if that's all right.
That's perfect. That's great. We appreciate the opportunity.
Yeah, thank you guys for moving us up in the agenda. Brian, we can perhaps talk off-site. My dog's barking. We can perhaps talk off-site if there's some different formatting we want for this meeting or different timing, but we'll make sure we get you the information as you need it.
Absolutely. Thank you.
Gentlemen, you're free to go. Thank you so much.
Thank you, buddy.
Great. Thank you.
Absolutely.
Bye. Thank you, Bob. Bye.
Okay, we did skip over one item, procedural item. We have not yet approved the minutes from the February 25th, 2022 Audit and Finance meeting. Mr. Perkins, have you had a chance to review those or look at those?
I have. I'll make the motion to approve as written.
Okay, well, I'll second and vote for that, so the minutes are approved. All right, next up on the agenda, we'll go back to unless there's anybody else you'd like to take out of order, Mr. Kidney, then let's go with the Munis implementation update.
And thank you. As I mentioned earlier, the consultant that usually does this was out, unable to make this meeting, and so we asked Cindy Gray, the Chief Financial Officer for the city, to give a brief overview. And Cindy, if you would.
Hello, good afternoon. And I am going to go ahead and share my screen. And hopefully, can everyone see my screen now?
Yes. Yeah. Absolutely.
All right.
Thank you.
All right. Yes. As Brian mentioned, Ron couldn't be with us today, so I'm going to go ahead and speak on some of the things that's going on within Munis financial system and kind of where we stand and how we're going forward. So Munis is our financial system, and it provides our financial information, human resources information. Payroll is out of this system, budget, and also our transparency program. Munis was implemented in 2018, but not all the modules were implemented at that time. And so Ron's group came in to help us get through that. And so we are now to a point where we feel that the projects that Ron came in to help, Ron and Pam came in to help us complete are essentially complete. There's a few items that are still out there, but we're waiting on other pieces in order to finish up some of those things, like the utility billing integration. We are doing an upload and a download, but to complete it, to make it completely done, we have to wait till the utility billing has updated their systems, and we just got notification this week that that has been pushed off again to, I believe, May or June. So there's pieces that we are waiting on other departments or other softwares and other to finish some of those things. In talking with Ron, we've decided, we feel that this particular part of the project is essentially complete and want to move on to the next phase, which is the timekeeping and advanced scheduling. So what Munis has provided us so far, there have been a lot of great pluses over the old system. It provides us real-time data. It allows us to download and upload from Excel to Excel, from Excel, CVS files. It's very great in being able to load large amounts of data and also to get data out of it. It also allows us to budget within the financial system, which we couldn't do before. So we're able to take salary tables, and we're able to take the actuals and actually use Munis to create our budgets within all of one system. It also provides a module called the ACFR, or the Annual Comprehensive Financial Report. This is probably one of the best things out of Munis that we got, is our annual report that we do every year for audit. This report is within Munis, and it does take all the information out of Munis, and then it allows us to then put it in a format that our auditors want to see. It's been a great asset for us. Also, we get Open Finance, which is up and running now, and Open Finance is our transparency portal. So anyone can go to our website and pull that up, and it's like a checkbook, an open checkbook. We provide, HR has many modules that are all in one place, where before they were in different pieces of paper, now it's all electronic. And that also includes another great feature, our ESS program, which is our employee self-service. It's our open enrollment portal. It is where we can get our W-2s online, can go in and make life changes, fill out W-4s, address changes, direct deposit changes. So it takes a load off of the back end staff, and it puts it onto the employee so they can go do it themselves. Been a great feature for us. So those are some of the things that Munis has done for us, and I just wanted to share those because as much as switching systems and the pains that it does going to a new system, we get a lot of benefits out of it as well. So I just wanted to share that today. Also, we have started and kicked off the timekeeping and advanced scheduling. We're putting that as a separate project. Since the systems that came with Munis aren't meeting what we feel to make our systems better, Ron is working on creating a schedule. We have identified our key groups of employees that are going to meet, and we're going to go through an interview type process on what they expect out of the system, what they want out of the system, and then in working with our procurement department, create an RFP and go out to bid and see how we land there. That's going to take a couple months. There's a lot of data to compile and get to a proposal together. So that's kind of where we stand on the Munis at the moment. So is there any questions?
Yeah, Cindy, thank you, by the way, although we do miss Ron's smiling face, and Karen DeLucy, who couldn't be here today, she's got an appointment, really misses Ron. So make sure you let him know that.
He'll be back next time. He will be back next time.
Well, that's good, because I don't know if we know it, not that you're not an able fill-in, but we love Ron. Is there any sort of timeline you think on the timekeeping and that timekeeping and payroll part or whatever?
Well, the biggest part right now is going to be identifying all the pieces that we need this timekeeping system and the advanced scheduling. So that's our first step, and we have already started that process. Ron is starting to make appointments to where we will actually interview each of those groups and get those pieces put together. So once we have those, we can create the RFP. It's probably going to take about 2 months to get all that done. It's a heavy lift.
Sure.
With our staff, and so we anticipate it to take about 2 months just to get to the RFP process.
I can tell you from a policy standpoint that the city council, on behalf of the residents, will be interested in transparency on that. And I'm not saying that we would or should or would ever, reveal an individual person's payroll, but something that can translate into, these are how many hours of overtime work this week, or special projects, or things like that, in a very generic way, would probably be nice. I'm sure that probably that's easy for software to do, but and I don't want to have any massive input into what should be included. Mr. Kidney?
I may want to just point out real quick that we do, Cindy went over a couple issues really quickly that I wanted to make sure I point out again. One is she mentioned the annual financial report that's put together.
Yes.
You might want to recall 2 years ago, the audit, we were cited from the audit by not having the financial prepared in a way that they were able to trace everything back. That implementation that was put in is very successful, and we've been able to get rid of that deficiency, if you will, that was there. Very, very excited. Nancy's on this call. She's responsible for that, and Cindy and her team. That was a really big issue, and we're very proud of that. The other thing I might just mention, we were talking about transparency and specifically about like overtime and things like that.
Yeah.
If you don't mind, I could show real quick, if anyone's watching or you, I could show how easy a citizen can go in and see.
Can we see that information now?
Yeah, I could just do it live real
Do
quick
it.
and
Let's
kind
go
of,
for
okay.
it. That'd be great.
So Cindy, if you don't mind, I'm going to pull and share my desktop.
Yep.
Okay, so if you go to the City of Independence website, I think we may have something right on the face of the page, but you could definitely go to the Finance Department, which is just indepmo.us/finance.
Yeah.
And we have a link here called Open Finance. And this is live, real time, it's updated every day. And this is basically where, like, when people ask me, citizens or department heads, about questions, this is where I go to look into our finances right now, because it really is, it's showing exactly what's going on in our finances. So we have revenue budgets, operating expenses, our vendor payments. Basically, it's our checkbook. You can just pull up and see, how much did we spend with so-and-so, or where did majority of expenses come from. But we also have the payroll module here, and so a person would be able to just go in there. I'm clicking on Explore here, and it's broke down by fund, expenditures by fund. If I want to go down here on these little bullet areas, I can just take off everything but
the one you want to see.
but over time. Yeah, let me get back
I got
to this. Yeah, so if I want, it's taking a little while here, so excuse me. And I take off other pay. And then I can go up here, take a look by department. Let's see, a snapshot of overtime by department. So you can go straight in there. Doesn't look like I have a little bit in my department. So you can just go in there and kind of see what that was over time. I can pull it up all years, so you can kind of see obviously, we don't have a lot in finance administration. I think actually what we do have is from the implementation of the software. So you can go straight in there and see the actual activities. And this is part of our commitment to try to be more, transparency, everything on there. This went live right at the beginning of the year was our goal. So it's been up for a couple months. And then we have plans. It's not a Munis product, but there's another product that resides on top of Munis that makes this even more powerful. So department heads could go straight in and go pull something up and get a report every morning. What's the status of overtime, or what's the status of this project, and things like that.
So you are genuinely talking about real-time finances.
Yeah, these, like if I go in, payroll we pay every other week, but if I go into the checkbook, if I can go straight back to the open finance, if there was a check cut yesterday, it's going to be, I just go into the vendor payments. It's going to be listed in here. So again, a lot of times vendors will ask, hey, have you paid this bill or something? And we're able to say, well, hey, if you go over here, you can see the status of your payments, of whether we've paid them or not. This breaks it down by vendor right here. Obviously, our top vendor is our debt payments that go through UMB Bank. And then, of course, IRS, which is our withholdings. Yeah. So again, I would invite at any time, people can go here, take a look. If there's questions about it, if they want to see different things. I wish it was more flexible. We're hoping later this year or next year we'll be bringing on a new product to make it more flexible, but that's where we are now. So I don't mean to take anything away from Cindy's presentation or anything, and so I apologize to her on this, but I just thought since you brought up that transparency, you might find this of interest.
Yeah, since I brought it up and we're already doing it, yes.
Yeah.
That was a perfectly good interjection.
Okay.
Cindy's just too polite not to tell me to look at the website, dummy. I think that's all I was really curious about on the Munis stuff. I'm glad that we caught up. I'm glad that we've taken advantage of what we can take advantage of, and I feel like it'll be just so extremely valuable to get all the timekeeping in one place and not on paper anymore. I think we have proven that is long overdue. So let's get that. We love it. Mr. Perkins.
Nothing here.
Okay, very good. Ms. Gray, thank you very, very much.
Thank you.
Next item is Staywell. This committee, I've asked to keep this on the agenda, and I probably will keep it on the agenda for a while because of the request for auditing services to be done on the Staywell Fund. So that's really what I'm here to ask you gentlemen about today. Can you give us an update?
Sure, I'd be happy to. The city manager's office has been in continuing contact with the leadership of the Staywell Committee and kind of hammered out kind of where city management and Staywell agree on, and that a performance audit is a good idea, recommendation for the city to move forward. There continues to be kind of some questions that come up that people always kind of bring up, and we just want to put that to rest. We also want to find out. So such things, what's the impact of Staywell Fund for moving post-65 into a separate Medicare program? What was the impact of transitioning the city-run clinic to outsourcing that to the area high Vs? What was the impact of the incentives that we use to drive our users to the high deductible plan? What's been that impact of that movement? So those are the kind of questions that we receive a lot from the committee, and we feel that is more of a performance audit, not I think the term that's been used as a forensic audit. So so we're moving forward. We're starting to we're getting ready, hopefully get an RFP out to the market about a performance audit. I spoke with the chair of the Staywell plan, And we might be able to find this audit, this performance audit, actually through CBIZ, who we're already using. They have an actuarial group that will come in and do those kind of things. So we're working with the Stable group to kind of see if that would be something they'd be interested in. At the same time, we still have a resolution out there from the council asking for a forensic audit. We've reviewed, we've gone through, and today, in fact, just right before this meeting, we've edited an RFP to send out for the council of for a forensic audit. We found some other very specific forensic audit RFPs. So we're trying to take that, since we didn't get a lot of specifics on what exactly they were looking for in that resolution. So we've gone back and made it a little bit more wide, like, okay, here's the resolution that was asked for a forensic audit of the Stable Fund. So we plan to send that out again in the next week or two. And when we receive that, we'll bring it back to the council. So we have two things running. We've got the forensic audit that's been required by the city resolution, but then we're also management has been working with Stable on doing a performance review.
Okay. Obviously, we're here to help, so if you need any guidance or input from a policy perspective on the council side, we're happy to chime in. We're also happy for you guys to do your work. And I appreciate that you're continuing with the forensic auditing, because that was supported by some of the Stable folks and passed by council. So thank you very much for the update, Mr. Perkins. Okay, very good. Next item on the agenda is, and this is us filling in as the management analyst, leave of absence request.
Yes, as part of the procurement, the travel policy is that the council employees request travel from the management analyst. However, as we've discussed actually last meeting, that
Right.
position's not filled, and so we're deferring it or asking this committee to look at those and fill that role of approving
This specific
travels.
one, yeah.
So if you want, I could pull it up, or I could just verbally talk about what's in here, or it should have been in your packet.
We have it here.
It
Okay,
is.
so,
Yeah, it
So-
is. Mr. Perkins, do you have any questions?
I don't have any questions.
This is just a trip for Ms. Behrens for continuing education, I believe. Is that right?
correct.
Yeah. You have a motion, Mr. Perkins?
Motion for approval.
Okay, I'll second that and vote for it. So the travel is approved.
Okay, thank you.
Thank you very much. Next item on the agenda, we've covered the quarterly investment update, so we've got the monthly financial presentation.
And that would be me again. This is Cindy Gray, CFO. And I am going to share my screen once again for our financials. So I'll hit the highlights and then have any questions that you may have. Our city real estate property taxes, they come in November, which they did. And so we are running right on track with those property taxes. We do get recoupments throughout the year, but typically they're fairly small and don't impact us a whole lot. Sales tax, as you can see, the red line is for the current year. And we are trending just slightly lower on the sales tax for the month of February, but we are ahead of our 2019-2020 year. So we've been hitting pretty good on all of our targets. We are just slightly under right now, but still quite a bit ahead of the 2019-20. The sales tax, actually, compared to last year at this same time frame, we are actually up 3%. 3% of the the 2019, 2020. So we are a little below on the 2021, but we are ahead of the 2019, 2020. Our use tax, as you know, in November we held a special election that citizens voted to increase the police use tax that we get to $4 million from a previous $3,032,000. So that is in place, and that's what numbers are being based on currently, are going to the police sales taxes, the $4 million. And so that's what these charts are for. So you can see in the early months, money goes to the animal health levy, and then the police department it's split 50-50 until the animal health is met its cap. And once that cap is met, then it falls over into all police. Once the police cap is met, then it will trickle into a percentage based on all of the other funds that the use tax will apply to. And transient guest tax is actually a nice little surprise. We are actually trending higher pretty much almost all year long. And we have actually exceeded our 2021 total receipts. I expect us to exceed our 2021, and we may be just short a little bit of the 2019, but we have rebounded from the pandemic very well in the transient guest tax. So that's a nice perk that we're seeing. Our fund balances report, basically we try to keep a reserve balance, our fund balancing policy, and everybody is pretty much meeting the goals, except for our general fund is down, as well as our fire protection sales tax. Power and light is also under. I do want to mention the power and light, water and water pollution just went through a cash resiliency update. So we have updated all of their numbers. And those numbers, the cash reserve is based on different criteria, like the revenue risk, capital reserve, expense risk, working capital. And then our PFM does this for us, and they go through different metrics and come up with target values. And so these numbers are now the new targets from that cash resiliency report. It was presented to the PUAB at their last PUAB meeting, and we have updated these numbers for our financials. So that's been, those have been updated. And then of course we have capital improvement projects over the next 6 years. And some just notes of item. Our general fund revenues are up just a little bit, are trending just slightly up. So that's a good thing. The American Rescue Plan, we did supplement our general fund by $3 million. Without those funds, we would be at 69%. So having that little extra helped. City clerk is above expenditures. They are at 83, but that is due to that special election costs, and fire is running a little higher as well, mainly due to the overtime and minimum staffing that is required. They've also has some encumbrances that they've entered to at the beginning of the year, and as each month goes by, that dwindles down as it gets prorated. Power, light, water, and sanitary sewer, all are operating very efficiently. Their expenses are below what we are for the month 8. So really no big concerns at this point. So travel report is included as well. I'm just kind of going through the reports that we provide online so that you can see those. And of course we have our ARP funding plan. And this basically tells you how we how we plan to split the money. July 1st, were the funds that we received. We should be getting a second tranche here in July of 2022. And this also will show you how much we're expected to receive and what our actual expenditures are so far to date and how much we have left. So we have used almost all of the funds that we received for our first tranche. We're just shy of using all of those funds. Anybody have any questions at the moment?
Do you have, Ms. Graystan Hobart, I think it was on the slide, but does it look like the police use tax is going to hit the 4 million? And then
Yes.
when? What's the projection?
I don't know that, but I will definitely get that. I can get that information to you. I have not done a forecast on that just recently, so I can do that and we'll get that to you.
Not crucial, just curious.
Okay.
That's it for me.
I do have one. It's not a crucial question, but it's an interesting question. I was pondering when you were talking about our guest tax, that we have the projections here. Is there a way to forecast the projections if a development was to have been built out and added in 152 rooms or 100 rooms or 150 rooms at an 80%, 85% occupancy at the standard average for a particular year, and see what that dollar amount is and see how much fund revenue is being shortchanged to the city for not moving forward on a development? Does that make sense? Am I saying that correctly?
Yeah, no, yes, sir. Yes, we could do those projections. And that's something typically that you would see the tourism fund putting together.
The old Kmart site specifically.
Mm-hmm. So it's a matter of math. I mean,
Sure.
you take the class of hotel, multiply it times resident or the rate, and then you take a look at your other hotels that you already know the information of along that corridor, and you can make a pretty decent estimate of what that revenue would be.
Just when you have nothing to do on a Wednesday afternoon, do you think you can? Could the committee receive that at your leisure? No particular hard time frame.
Yeah, we can work with tourism. Again, I believe that Morris and his group, I think they already do some of those projections,
Sure.
but we'll follow up with them and put that together.
Why don't you ask Morris to come in and talk to us about that? I know it doesn't need to be before budget or anything, but I'd kind of like to get his take on the finances of tourism. That's an excellent issue and an excellent question, Mr. Perkins, because we're going to have to decide what to do if we're going to take a deeper dive into tourism and take a look at it. And I think we need to do that. It's got a pretty decent tax base that we could probably do some real good with. I like that. Why don't you talk to Mr. Heidi about that? Again, we could do it after the budget. It doesn't. I'm not trying to put more.
Sure.
Does that sound okay, Mr. Norris?
You bet.
Okay. I'm sorry, John. I didn't mean to jump in on you. Was that?
No, that's a perfect segue into combining what we were discussing. So yeah, that's all I have.
Wonderful. Thank you.
Thank you, Cindy.
We have the next Audit and Finance meeting tentatively scheduled for April 22nd. Is that good for everybody? Yes. And what I'd like also to put on there, if you'd note, Ms. Saxton, for future items is discussing going to quarterly Audit and Finance meetings. I know that because of the results of the single, what was the audit?
We had a single audit review done as part of our
Single-
fiscal audit.
Single audit review from a couple of years ago where we had some deficiencies. I know it was important to this committee to make sure we helped everything get back on track. This year's single audit report was glowing, a glowing report, and the deficiencies have been remedied. So, I think that's something we should talk about, is doing quarterly meetings, and I'd like to see that on our agenda to discuss next time, if that sounds all right, gentlemen. I see no no's. Wonderful. Anything else today, Mr. Perkins?
I have nothing further.
Mr. Kidney, Mr. Norris?
Done from us. Thank you.
Okay, meeting, let's see, it is 3:41, meeting's adjourned.